It was Saturday night at 9 p.m. I was in the middle of our monthly live stream when someone commented in the chat, "Labour won." I was skeptical at first, so I picked up my phone and had a quick look. My screen was filled with red dots. Yes, Labour had won by a landslide. Back in February, Labour's polling numbers weren't looking good. But in just 3 months, they managed to turn the tide and secure a strong comeback. The Prime Minister has now been successfully re-elected. At this point, how they won no longer matters. What matters now is, under the leadership of the federal Labour government, which direction will Australia's economy take over the next 3 years? What will happen to the Australian property market? Most importantly, regardless of whether you support Labour or not, your personal wealth will be affected by this unstoppable trend. So let's break it all down. We'll unpack each policy in detail, project how the economy and property prices will trend over the next 3 years, and prepare both our mindset and take actions ahead of time, so we can uncover the strategies to grow our wealth under a Labour-led government. Hi, I'm Alex. It's been a while since my last video. I was busy publishing my book and take a launching tour in Sydney, Melbourne, Brisbane, and Perth. We've launched a new service product and recruited more strategists to the team. Finally, I can put all this aside, and I'm now back on the channel, uploading videos weekly. So welcome to Aus Property Strategy, where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. This federal election has been nothing short of bizarre. Over the past 3 years, Labour barely accomplished anything significant. The Voice proposal collapsed. Their ambitious plan to build 1.2 million homes in 5 years fell severely behind schedule. And real wages for Australians actually went backwards. People have been experiencing a cost of living crisis and housing crisis. I voted early. In my electorate, most of the campaign material I saw came from independents and Labour. The Liberal Party, on the other hand, barely made a sound. Now, there are many reasons for the Liberals' loss this time around. Peter Dutton's personal image, the lack of clear economic policy, their tax cuts weren't bold enough, their policies flip-flopped, and they seemed too closely aligned with Trump-style thinking, which, frankly, many Australians dislike. There were plenty of reasons, but all of this is now in the past. Now that the results are in, let's go through all the Labour's campaign promises and take a closer look at what kind of Australia we're heading to. Number 1, tax cuts. To ease pressure from the rising cost of living, the Labour government announced a new round of tax cuts for 12 million working Australians, starting next year. According to the federal budget released in March, from July 2026, all eligible taxpayers will receive a $268 tax cut in the first year. From the second year onward, they'll enjoy an ongoing $536 annual tax reduction. These new tax cuts are an extra boost on top of the previously announced Stage 3 tax cuts set out in early 2024. The government also introduced a brand new tax deduction policy. Starting from July 1st, 2026, all taxpayers will be able to directly claim up to $1,000 in working-related expenses as immediate deduction. In a sense, it's a reduction in personal income tax. For individuals, it's a tax break. For the government, it's a loss of revenue. But where exactly is the money to fund these cuts coming from? That's still unclear. If the government can't make up the shortfall, their only option is to issue more debt, which would increase the federal budget deficit. Number 2, renewable energy. The Labour government has set a target. By 2030, 82% of Australia's electricity must come from renewable energy sources: solar, wind, and hydro. They're rolling out a series of special funding programs and priority projects to fast-track the green energy transition. One of the policies is encouraging households to install home battery systems alongside rooftop solar panels. If you meet the eligibility criteria, you can receive a 30% discount. This battery subsidy program will officially launch in July 1st this year and run until 2030. Green energy is certainly good for the environment. Compared to fossil fuels, it's cheaper, but the issue is unstable supply. For ordinary households that install batteries, it's manageable because they can store electricity. But for industrial production, it's less effective. Then again, Australia doesn't have much of a manufacturing industry anyway, so it probably won't matter much. Number 3, non-compete clause ban. Labour will also move to ban non-compete clauses to boost competition between Australian companies and encourage entrepreneurship. For example, a hairdresser's employment contract might say, after quitting, you can't open a salon or work for a competitor within 1 kilometre for a year. That's a non-compete clause. On the surface, it protects employers, But in reality, it weakens business competitiveness, slows innovation, and makes it harder for employees to find new jobs. This policy will take effect in 2027 and will apply to employees earning less than $175,000 a year. The government will also ban companies from colluding to suppress wages or signing secret pacts to prevent talent from being poached by other firms. The goal is to stop ordinary workers from being systematically constrained and give them real control over their job options and bargaining power. I'm a business owner myself. This policy won't be good for me, but I still like it because it increases competition, which will force my company to become more efficient and innovate. In the long run, that's good for lifting productivity across Australia's workforce. And greater productivity leads to greater national wealth. Number 4, immigration policy. The Labour government estimates that by the next financial year, net overseas migration will fall to 260,000 people. Although they originally planned to cap international student numbers through legislation in 2024, the bill didn't pass, so the government found a workaround. They'll use administrative measures, not parliamentary law, to control migration numbers. They're also raising the student visa application fee by $400, non-refundable whether approved or not. These changes will take effect on July the 1st this year. What this shows is that the government is trying to strike a balance between easing migration pressure and boosting revenue. Without legislative backing, Labour is choosing higher entry threshold and tighter administrative processes to bring down overall migration levels. The barrier to studying in Australia is going up. Migration is getting tougher. The international education and migration industries may soon hit a turning point. Number 5, housing policy. On housing, the government plans to invest $10 billion to build 100,000 homes exclusively for first-home buyers. In other words, investors are not allowed to buy them. Honestly, even if I were allowed, I probably won't buy them. Government-built homes are likely to be high-density apartments or townhouses in remote locations. Small blocks, limited space, maybe a few detached houses too. These homes prioritize affordability and high density, sacrificing many other factors. They're not exactly ideal investment properties. And since they're only for owner-occupiers, they won't add to the rental supply. So the current high rent situation won't be alleviated by these 100,000 homes. I know some might argue if people buy homes, they won't need to rent, freeing up rental properties and increasing supply, so rents will go down. The logic makes some sense, but only if, number 1, all of these buyers are currently renting, number 2, all of them use the first home subsidy to buy these government homes, number 3, the government can actually build that many homes, number 4, the location and prices are good enough to attract buyers. I don't believe they'll be able to build that many. Looking back over the past 3 years, when it comes to housing promises, not a single one has been delivered. House prices and rents keep rising. Homes that were supposed to be built are still nowhere to be seen. This policy is set to begin in 2027. Meanwhile, from January 2026, the government will introduce a 5% deposit scheme for all first-home buyers. 10% of the loan will be government guaranteed, meaning buyers won't have to pay for lender's mortgage insurance. The remaining 80% will be financed through standard bank loans. So in early 2026, expect a noticeable price surge in properties that fall within first-home buyer ranges. Of course, a promise is just a promise, and promises get broken. Back in the 2022 election, only 70% of Labour's promises were fulfilled. The remaining 30% either quietly dropped or missed by a mile. For instance, they promised to raise real wages after inflation, but real wages actually declined. So at the end of the day, what they say is one thing. Whether they actually do it and whether they can is something only time can tell. All of this aren't the real focus of today's video. What everyone watching this video cares about is where is Australia's economy and property market heading over the next 3 years. To those still celebrating Labour's election victory, I'm here to pour a little cold water on that celebration. Because the truth is, Australia's economy and your everyday life may very well be heading into tougher times. So how did Australia's economy perform under Labour's leadership over the past 3 years? Before we get into it, I want to make one thing clear. Economic performance isn't always something a government can fully control. When the economy happens to do well, even if it's not because of government policies, the ruling party will always take credit. On the flip side, if the economy struggles, they'll blame it all on the mess left behind by the last government, insisting it has nothing to do with them. And ordinary people, when life gets tough, they rarely think about improving themselves first. Instead, they blame the government. It's always the same pattern. Take credit for the good, push blame for the bad. That's just human nature. So with that psychological bias in mind, let's look at how Australia's economy was under Labour. The most obvious indicator felt by everyday Aussie is inflation. It hits us in our daily lives. If eggs cost $10 today and jump to $20 tomorrow, you feel the pressure instantly. You start worrying, will my paycheck still cover everything next month? When Labour came into power last time, inflation was already accelerating. In the 8 months that followed, it soared to over 8%. Thanks to a rapid series of rate hikes by the RBA, inflation began to ease. By the end of March 2025, the trimmed mean CPI year-on-year fell to 2.9%, and March trimmed mean CPI was 2.7%, finally within the RBA's target range of 2 to 3%. So over these 3 years, inflation basically went on a wild roller coaster ride. What's interesting is the price increases were most significant in everyday essentials. Holiday costs rose 45%, eggs by 36%, and insurance also jumped 36%. Meanwhile, prices actually fell in areas where the federal government used the taxpayers' money to provide nationwide subsidies, like childcare, which dropped 5.3%, and electricity bills down 11.3%. These price drops directly benefited lower-income Australian, one of Labour's core voter bases. Following the inflation spike, the Reserve Bank stepped in aggressively. Starting in May 2022, the RBA lifted interest rates from 0.1% all the way to 4.35%. Such a large and fast hike is rare in Australia's history, and it put immense pressure on the Labour government. Why? Because every Aussie with a mortgage saw their monthly repayments skyrocket. Some households were paying $5,000 more per month. The share of income going to mortgage interest jumped from 2.3% to 5.6%, the highest level in the past 13 years. From November 2023 to January 2025, that high rate held steady for over a year. It was only in February this year, with inflation easing and job market stabilizing, that we saw the first cut, just 0.25%. As of now, the cash rate is 4.1%. Many expect another cut on May 20th, and possibly 1 or 2 more by year-end, but we'll see how that plays out. Inflation wasn't unique to Australia. It was a global phenomenon. In fact, for the Labour government, this global inflation wasn't entirely a bad thing. Iron ore, coal, and gas prices surged, boosted further by the Russia-Ukraine war. This resource boom brought the government a massive windfall, $400 billion from exports. As a result, Australia ran a budget surplus for 2 years in a row. But that stroke of luck has run its course. Over the next decade, Australia's budget deficit is expected to deepen. With prices surging and interest rate rising, household budgets came under pressure, and many Aussies were forced to cut back. The first thing to go? Non-essentials. Clothing, electronics, furniture, anything that felt optional. This spending slowdown dragged down the entire economy. Real GDP growth, meaning inflation adjusted, dropped from 3.6% in March 2022 to just 0.8% in September 2024. Aside from the COVID era, that's the lowest annual growth since the early 1990s recession. Only in the past few months has GDP growth slightly picked up. But most economists agree it's no full recovery. At best, it's a slow incremental rise. While GDP is still growing barely, on a per capita basis, the picture looks worse. Australia's per capita GDP has declined for 7 straight quarters. In other words, while total national wealth is inching up, the average Australian is actually getting poorer. Why? For one, Australia's population has surged due to migration, especially from lower-income, lower-skilled migrants, which has dragged down average wealth. On top of that, there's poor government spending efficiency and stagnant productivity. Over the past 3 years, the government ramped up spending just to make GDP numbers look better, outpacing private sector growth by a wide margin. By the end of 2024, government spending made up 29% of GDP, and this wasn't emergency COVID spending. This was under normal post-COVID conditions. Labour's explanation? To avoid recession, we need more government spending. But if this trend continues, Australia's economy might just morph into a full-blown planned economy. Big spending on infrastructure and subsidies also require manpower. That means more public servants, more contractors working for the government. And let's be honest, public sector work often comes with padded quotas, extra perks, and lower productivity. People take more leave, get more benefits, and work less. Since Labour represents working class and low-income interests, they naturally have to deliver these perks. But the direct outcome is a decline in productivity. And since Labour came into office in 2022, productivity has indeed fallen. Let's not forget productivity is the real engine behind wealth creation in Australia. And right now, the engine is weakening. Despite inflation, a pandemic, and soaring interest rates, Australia's unemployment rate has somehow stayed stable. Many credit this to Labour's governance. But if we dig deeper, we'll find it's largely artificial. Yes, job numbers rose, but mostly in the public sector. As of March this year, government jobs were up 8.9% year-on-year. Private sector jobs barely moved, just 0.6% growth. In other words, the private sector, the true driver of economic growth, is basically flatlining. One of the key promises Labour made was to raise wages, and technically nominal wages did increase, but real wages, meaning purchasing power after inflation, didn't keep up. In fact, adjusted for inflation, Australians are now 1.9% poorer than they were when Labour took office. So yes, Australians are poorer. In Labour's last term, Australia's economy deteriorated, and Australians become poorer. And yet this election shows that most voters still supported Labour. You have to hand it to them. Their messaging worked. Both emotionally and materially, they gave most people what they wanted. With Labour now entering a second term, we'll see strong policy continuity. At most, we might see some fine-tuning. There's zero chance of a policy overhaul. So whatever momentum was created in the first term, good or bad, will likely continue, unless Labour gets lucky again. Say China's infrastructure demand explodes, mineral prices soar, interest rates plummet. Even if it's pure luck, Labour will surely take credit. Labour's core strategy is always the same: tax the rich more, subsidize the average person. As long as ordinary folks are happy, their voter base stays solid. And as long as that group is large enough, they can keep winning elections. So why make people rich? From what we saw in this election, today's Australia is not the same country I came to 20 years ago. Australia has become a poorer country, and Australians are becoming poorer. Productivity remains low, and unless one day people realize government handouts aren't enough to survive, and taxing the rich no longer brings in enough revenue, only then might voters decide to make a change. Right now, you have two choices: settle for an average life in Australia, maybe live off government benefits, or choose passive investment. Because working harder to climb the ladder is becoming more and more difficult. If everyone around you is doing the bare minimum, you'll be influenced to do the same. Among our Vision members at Aus Property Strategy, some people are working stable 9-to-5 jobs, not because they love it, and not because they think work can elevate their financial class. They do it to strengthen their loan capacity, so they can invest in property and use that to flip their wealth status. Funny enough, some of these members, despite earning less than their company's senior executives, now have more assets. If you're not running a business in Australia but working for someone else, the real path to financial freedom is this: find a stable job, boost your borrowing power, invest in real estate, and grow your passive wealth. As for property prices in Australia, they've got nothing to do with who's in power. It will keep rising in the next 20 years. If you want to understand why, please leave me a comment below and I will make a video on the topic. If you made it this far, please give me a thumbs up, subscribe, and share this with your friends. Turn on the notification bell to watch new weekly videos. And have a good one. Bye.